Hello, everyone, and welcome to the live event. It is Wednesday, March 13th. Let's get started with a review of the previous picks. That's how we start all these off. In fact, I can't remember what I showed you in the previous video, so it's nice because all I have to do is go back to the previous video, watch the first 5 minutes, and it's like, oh yeah, that's what I reviewed, and I can do the same thing at the back end of the video. I can go and look at exactly which trade was highlighted. So when I did my video on Sunday, one of the stocks that I featured, I actually featured two. One was MRNA, and that was Sunday evening. Look at that baby run Monday morning. Hello. That stock was up $13. I was looking to sell an out of the money bullish put spread on that one. Very nice pick. I like the D1 chart on it, and I like this compression here. I like the fact that the stock had poked its head above the 100-day moving average. It had this nice little trend line that it had breached to the upside, like that. Like the fact that earnings were back in here. It was able to hold that earnings gap and started to inch its way higher. A bit of a cup and handle formation. What is a cup and handle formation? Why is it significant? Well, it just shows that when you had the previous dip, that the next dip was half of that distance, and that's why you have the cup and handle. So it's just a higher low double bottom, and it has a nice visual horizontal resistance level that the stock has to get through. That's it. When you're looking at patterns and you go into a candlestick book and it's like, 3 crows flying, abandoned baby. I mean, all this nonsense. Don't learn what those patterns are and what those names are. Learn what that pattern is telling you. What is it signaling? It's so much easier. Just part of reading price action. So in this case, yes, we've got this nice breakout through horizontal resistance, downward sloping high minus trend line, pokes its head above the 100-day moving average. Monday, boom, we get that move. Now, to be fair, yes, I like MRNA. I still like it. I was looking to sell an out-of-the-money bullish put spread. And I don't know, because the stock opened where it closed, if that put spread was available on the open Monday. If it was, it wasn't there long. So I'm not going to do a lot of chest pounding here and tell you that, yeah, that's also bullish put spread. I don't know if you could have gotten it done, but it was sure a nice stock pick. So what does MRNA look like now? Well, we had this breakout. So the last 2 days, the stock has been able to hold this long green candle. We want half of it to be preserved. We don't want to see it reverse all the way. When it doesn't go ka-chunk, 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 3 red candles that reverse it instantly, then we know buyers in general are supporting this move higher. So digest those gains, compress, 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 compress. Now buyers are going to get a little more aggressive. Some of this selling pressure, some of this profit taking, some of that supply has been worn off. And now buyers know that they're going to have to pay up a little bit if they want to buy this stock. And that's what causes it to gradually move higher. I like MRNA. Would I sell a bullish put spread down on that 100-day moving average? The way it looks right now? Yup. So let's take a look, see what we can get. I think there's earnings coming out in April on this. So let's try and keep it in close. I mean, this is 3 weeks or so. 100-day moving average is at 101. So let's go 100. And we're not going to get a lot of credit for that because you can see the 100 puts are 94-cent bid. So not going to get a lot there. Might have to go out another week or so, make sure that we stay inside of earnings, and maybe go out to an April expiration. So April expiration, as you guys are posting, Pete, can you take a look at this stock? Pete, can you take a look at that stock? Please give me a reason why you like it and what side you're on. I'm not going to do an awful lot of Kramer's lightning round, as I like to call it. So Let me know why you like it. Why is it setting up? April 5th expiration. I think you can probably get close to $1 for that. And that would be selling the 195 bullish put spread for $1 credit. I would like that. And if the stock pulls in just a little bit more today, you might be able to get it. You can see how the stock is retracing a little bit. So yeah, that looks like it could be pretty decent play. I like that strength, and I like the fact that the stock has been able to preserve that long green candle. COIN. That was another stock that I highlighted Sunday. And you can see how the stock has been able to preserve these gains. It's marching higher. Crypto has been strong. Yes, the stock is vulnerable to movements in cryptocurrency, but this is no different than trading an energy stock that's strong relative to the market. Why are energy stocks strong relative to the market? Well, it's because the price of oil is higher. That's why they're strong relative to the market. The reason coin is strong relative to the market is because crypto is strong. Okay, it's an asset. I'm not going to guess why. I'm not going to try and rationalize why crypto stocks and crypto coins or cryptocurrencies are so attractive. I'm just going to let the price action tell me what the smart money is doing, and I'm going to trade accordingly. So we're trying to sell an out-of-the-money bullish put spread, I believe the 205-200. And so we could take a look at that and see if that's in line. I am flying solo today. Harry's a little under the weather, so we all wish him well. So I am going to do the best I can to answer your questions. And that's also why I'm asking you to pare back just a little bit on the symbols that you post. Trading questions, I'll always try and get to. So the 205-200, that is 16 cents bid offered at $1.31. Can you get $1? It's ask side, probably not. Super wide. You're probably going to need to see a little bit of a drop in coin. So how would I be alerted to something like that? Well, if only I had an alert system that might tell me when the stock pulls back and finds support, I would have something like that available to me. Okay, cool. Well, we happen to have that in Option Stalker. So I'm going to go into LRSI, and I'm going to be looking for a pullback. I'm going to go, LRSI is kind of a stubborn variable, meaning that the moves, when it moves from bullish to bearish to bullish, usually going to take a little bit of time. And so what I'm going to be looking for is I'm going to be looking for the variable to go, and I can be looking to go greater than 20. And I can tell you right now, based on this strong price action, that variable is greater than 20 right now. So when coin has a bearish LRSI cycle, goes below 20 and then crosses above 20, I'll have the dip that I'm looking for. And then I can see how deep and how long that lasted. And then I can decide if that bullish put spread is in range. Can I get $1 for it? Was that pullback brief and shallow? Yes, it was. Cool. Now I can get my trade done. Those are the types of tools and features that we've incorporated into Option Stalker Pro to help us with our trading decisions. I'm going to review a couple more, then I'm going to field a couple questions. So let's see here. Garmin, man, that was a nice one I highlighted 2 weeks ago in the live event. And Garmin, we wanted to wait to make sure that these gains had been preserved, very similar to what I just described to you. Yes, that supply from profit takers was eventually worked off, and then buyers had to get a little more aggressive. And there you go. Yeah, Garmin was a really nice pick. LYFT is one that I highlighted a couple of 10 days ago. I think that was in a Sunday video. I liked selling some naked puts out of the money down here, the 1550s at 60 cents. Yeah, that's been a beautiful trade. That one looks really nice. IBM was my pick from the live event last week. Right in here. Yep, the stock is higher. Okay. So they're all looking good. This is the system. This is the approach that we use. So let me take a look at a couple of questions and let me see if I can answer those. And then we're going to go in and do some market analysis. Just a quick snapshot. Market is not doing a whole lot of anything right now. You can see it's just hovering around VWAP. We got a lot of mixed candles, lots of wicks, lots of tails. Very good chance we are not going to do much of anything today. The volume is light. This is when you pare back your trading. You don't take a lot of trades because that, which looks like a breakout, and you buy, doesn't have any follow through. And then it pulls back, and now you've got a small loser on your hand. So you don't want to be in those situations. We need the breakout to get the stock on our radar, but then we need follow through. That is where we make money. So I'll take a couple questions here. Please give me a moment to read through them. When will semis recover? They recover? They'd have to go down for them to recover. They sure look good to me. Is there a little pullback? Yeah, they ran up pretty far. So they're going to pull back. They're going to find support, and then they're going to take their next leg higher. LRSI for coin. It went greater than 20. So actually it had dipped a little bit. But anyway, if we take a look at the semiconductors, I guess I could take a look at, TSM, for instance. I mean, folks, stocks don't go up in a straight line forever. So yes, this is a little bit of a pullback. It's starting to find some support. I wonder if the stock has ever done that before. Ran up. Yeah, hey, look, it pulled back. Okay, found support. It got back above AVWAP. Then it made another run higher. Yippee! Oh, well, I can probably expect that it's going to pull back again because that is what the stock does. Okay, there's no surprise here. That's what the stock does. When is it going to find support? It's going to find support when you start seeing it move sideways and then start to have some green candles in here, poke higher. They are able to hold their gains, and then you're probably going to see another leg higher. So you just have to be patient in here. What happens is that FOMO Joe gets all hot and bothered in here. Oh, breakout to a new high. Yeah, baby. So he starts loading up in here with short-term call debit spreads, weekly options, and then the bottom falls out. Well, now he's exposed to time decay and everything turned to shit overnight. Oh, gee, that's horrible. You can take a very long-term perspective on it. You can just buy in the money calls and you can ride out some of these waves. Or if you're a short-term trader, you want to be long here, downward sloping trend line, breakout to the upside through horizontal resistance. This is where you're long. This is where you are taking profits. Thank you very much. Pulls back, you're in waiting mode. Just waiting for it to get that strength, waiting for some of that supply to be worked off. Are semiconductors dead? No. Earnings have been great. You missed selling Marvel before earnings. I never hold over earnings, okay? Harry trades earnings. Harry has lots of fundamental information available to him. He has a knack for analyzing it. I have tried to trade earnings, and it has been a 50-50 proposition for me. I've tried for years to devise all sorts of systems for it. And yes, marginal winners. So my conclusion with earnings is, why would I waste my time analyzing earnings and playing earnings when my hit ratio is much, 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 much better trading everything else besides earnings? 50-50 is crap for me. I'm not going to bother with that. I want 80, 90%. win rate. That's what I'm able to attain. That's what I'm going to be focused on. So I avoid earnings like the plague. In fact, in Option Stalker Pro, that's why we have all sorts of ways to measure the distance from earnings, meaning how many days until the next earnings announcement, how many days since the last earnings announcement, because we're able to structure our trades around that. And I love looking at companies that have announced 10 days ago to see what the stock is doing after that earnings announcement. Did it move higher? Has it been able to retain those gains? Has it worked off if it had a big gap up? Has it worked off some of that supply, some of that profit taking? If yes, that tells me the buyers are in there aggressively moving the stock higher because the news was good. They like the earnings. Well, those set up very high probability trades for me. So I'm sorry you missed making money on Marvel and you held over earnings. If you're trading, don't hold over earnings. If you're a long-term investor with a horizon that is 6 months or longer, okay, fine. Then you're kind of in a mode where you're going to be holding over those earnings announcements. Yeah. Someone's asking me a question about, can you explain what happened to Sage? And they're got all sorts of fundamental information. Oh, this happened and that. I don't care. I mean, it's just going to look at the chart. I don't trade fundamentals. I trade technicals. Technicals tell me this is a nasty stock, okay? Right now, it's selling off hard. It had one big spike up in here. If you've read my course, The System, which is free to members, you have access to it during the free trial, we do not worry about solos. This is a solo. This is just one long candle. Big whoopee ding dong. They can't rally it. They can't rally it. Start to see some wicks. And now all of a sudden it's like, nah, this wasn't really legitimate. And now the stock starts to pull back. What would be more significant to me is if you took all of these gains and you hit green candle, green candle, green candle, green candle, green candle, green candle, green candle consecutively. That's meaningful. That is persistent buying. This is just one-off news. We love it. Yay, great. And then the party's over. And then, it wasn't really that good of news. And then the stock retreats. So I don't have to know what the news was or what the stock did. I just watch price action. That's all you really need. Okay, let's see. Yes, the McDonald's bullish put spread I highlighted a few weeks ago. Somebody spit on my hamburger. And McDonald's decided to take a dump today. And so it's in trouble, but I'm not overly worried about it. And there you can see how it broke down. I don't know what the news is today. I guess I can check that to see. Consumers are pulling back. So the company came out and said, that's as good as a warning. People aren't buying as many Shamrock Shakes as we thought they would. So yeah, the stock is pulling back. I have to check the guidance on it. I don't worry about intraday price movement on a stock if I'm in a swing trade, but given that we've got a few days left till expiration, yeah, I've got to worry about this one. And yes, I could conceivably leg out of this spread. I have a video on how to leg out of bullish put spreads gone bad. The reason that and thanks for asking this question, it's a good question. The reason that we sold a bullish put spread below AVWAP-E is because that was support. We had horizontal support here also at 290. We're just expecting this stock to chop back and forth. There's not a lot of news coming out. And then lo and behold, the company has an announcement like that. Okay, this is material because it's going to impact earnings. So there's an opportunity to leg out of a spread like this, but I would need to have two major forces working for me, and one of them is going to be missing, which is the market. So I may roll this spread down and out and roll it even lower, but I got to see how much traction this move actually gets. So McDonald's does move around a bit. We'll see how the stock ends today. Perhaps there's enough. It's got to rally pretty substantially, though, $5 in the next 2.5 days. So it's a pretty tall order. I'm probably going to have to close this one down for a loser. News happens, untimely. If this news came out next week, we'd be clicking our heels. It didn't. It came out today. Unexpected. Nobody was expecting McDonald's to come out and say, we're not selling Shamrock Shakes as much as we thought we would have. So you got to roll with the punches and know that the vast majority of these are going to work out to your favor. Watching JPM and HD this morning. Yeah, both of them look good. JPM bank stocks have been excellent. So let's do a little market analysis, kind of get our bearings there. JPM has just been a stallion. Just love it. Every little pullback is instantly gobbled up, and it's just got this nice tight trend higher. So take a look at the market, and what do we know? Well, we know we've still got this upward sloping trading channel intact. We know that we're starting to see more red candles. Okay, so back in here, hardly any red candles. We could start the year off with a little bit of a dip. That thing was just instantly gobbled up. And look at the move from January 5th to February 12th. That is a very strong move. But since the beginning of February, we really haven't covered much ground. And now we're starting to see these air pockets, just a little more choppy. You get this rally and a pullback, rally, pullback. Starting to see more red candles in here. The move is starting to slow down. It's starting to mature. What does that mean? Well, that means the buyers aren't quite as aggressive here. Here they loved valuations and where the market was and what the underlying news was. Here they're not as interested by it because the market's run so high. And so they're more passive in here. The one thing that I had mentioned this morning was that if we look at the equal weighted index, and I'm going to put up a chart. It's called RSP. I'm going to overlay the SPY on this. You can see that, and this is actually, I believe, good news for the market. You can see the gray line is the SPY. Okay, so from here to here, SPY made a really nice move right in there. What did the broad equal weighted index do? Nothing. It compressed. So what does that tell us? Well, because the S&P 500 is weighted, so you have greater representation in the mega cap stocks. Those were the stocks that were leading the charge higher. It was the Magnificent Seven. It's the big tech companies. That's where you're getting the rally from. And AI had everybody excited. NVIDIA. Well, this is not particularly healthy when you have a tiny fraction of the S&P 500 representing the majority of the gains. And that's what this is telling you, is that most of the stocks aren't rallying, but the big mega caps are. So now we're starting to see some liftoff here. We're starting to see broad-based participation. That's good because it tells us that industrials and some of the cyclical stocks, the heavy equipment manufacturers, they're all starting to participate in this rally. And that's because there's some underlying growth and expectations in their future profitability. So some of those stodgy, boring old stocks are going to start presenting some pretty decent opportunities. And you're not going to just have to trade semiconductors. You will have opportunities in other areas. So yes, this is healthy long-term for the overall market. This is healthy for the market overall, but we're starting to see momentum wane. So what's the takeaway? Well, the takeaway, and I mentioned this in my pre-open comments, was that you're going to get some pullbacks. And this is where you can get a little bit more aggressive with your day trades when you start to see one of these bullish trend days, So from a day trading standpoint, this is when you want to strike. You want to be aggressive. You want to ride those trades all day long. I used an analogy that we are apex predators. We've had a big kill and it's going to have to satisfy us for a few days. And then the market kind of waffles around, tiny compressed bodies, trying to find support, trying to confirm that the bid is still there. So that big kill is going to have to last us a few days. And then there we go. There's another one. There we go. There's another one. That's another one. So these are the days from a day trading standpoint when you can really kind of get behind the move. From a swing trading standpoint, everything's stable. What do I see coming up ahead? We've got the FOMC a week from today. First of all, we've got the PPI coming out tomorrow, I believe. I'm not even paying attention to it because the CPI came out a little hotter than expected yesterday. And how did the market receive that? Very well. The market rallied. We had a nice day yesterday. So even if the PPI comes in a little bit hot, I'm not overly concerned about it. I'm not even concerned about the Fed next week, to be very honest with you. Fed has told us higher for longer. Strong job growth, strong economic growth, no credit crisis. Okay, well, the Fed doesn't need to hike rates, to ease. They're not hiking either. They're pausing right now. So I don't think you're going to see anything different out of the Fed for the next 4 months. July, they've said, maybe they'll ease, but they don't have to. Not as long as job growth is strong. Inflation is a little hotter than expected, 0.4%. Okay, they're not going to be in a hurry. Wages had been going up. They went up pretty substantially in the last monthly report, but they came down this monthly report that we got last Friday. So, okay, that's cool. They're just not in a position where they have to do anything right now. So I don't see the FOMC statement next week as really driving the market one way or the other. If we get a big blow-off rally, which I would absolutely not expect because they're going to be casting warning to the market. They're not going to be forecasting that, we're going to be cutting anytime soon. So I'm not expecting a big blow-off rally, but that is one thing that we have to be careful of. We don't want to go through the upper line of this trading channel with long stacked green candles because that's going to spark profit taking, and that backside can be very nasty. So if you see that and you have swing trades, you have day trades, you should be treading very, very cautiously because we don't know how bad the backside can be. You might think, well, we're just going to retrace into this channel, but oftentimes not only will you retrace into the channel, but you'll blow through the lower end of it. And then it's like, okay, well, how much lower are we going to go? So we don't want any bad economic news. We don't want to have a buying climax, a blow-off rally. And if we get a decent little dip in here down to the lower end of this trading channel, I'd be a very interested buyer there because once that support is established, then we're going to have a nice opportunity to rebound. So until then, you just expect that this pattern that we've seen is going to continue. All right, let's take a little break here and let me take a look at some more questions, see if any new ones have come up. Let's see here. You guys aren't posting any questions. So it's going to be fairly boring if you guys don't post any questions because then you're just going to hear me mumble for a while. So let's take a look and see if we can find some decent stock picks. I can tell you a little bit of market analysis. I can go into the M5 and I can show you things that I was discussing yesterday in the chat room. And so for those of you who are day traders, everything that we do is based on previous price action. Previous price action tells us what is going to happen and what we should expect and what should be most likely. So before the open, we got the CPI. CPI came out at 0.4%. Market rallied on the news, and then it sold off on the news, even before the open. So I mentioned to everyone, hey, listen, we had nice 15-point S&P rally, and then it all retraced. What does that tell me? It tells me that we can expect some volatility. There are people embracing it and people that don't like it. So we come in, we've got a bearish 1OP cycle. So now we get this selling pressure in here. It only lasts 4 bars. And this is also why we wait for the first 45 minutes at least before we start initiating day trading positions. Very valuable information. The first hour is amateur hour. FOMO Joe is trading like a madman. He's not somebody you want to be joining. And we miss out on this valuable information. Well, what was that information? Volatility and heavy volume. Okay. Well, now I know I can expect volatility. I knew that before the open, and now that's being confirmed in the first half hour. But it looks like we've got a bullish cross here, and it looks like buyers are kind of supporting what seems to be a relatively hot CPI. Okay, well, we're above VWAP, got a bullish cross. We've been able to recapture the previous high, the open. All right, this is where you can try some longs. Ooh, 2 long red candles. Now, this is kind of where most people go wrong, is because they've been taught from all of their candlestick pattern books that, oh, look, this is it. We got a bearish engulfing candle. That's a high. This price pattern right here is interesting to us. It's a warning sign to us, but this is not the tell. This is the tell. How we got here is the tell. So because of this price action, already before the open, after the open, in here, I'm getting long. I'm in the back of my mind, we are going to see some volatility. So now when you get it, it's like, ooh, okay, we had a couple of long red candles off the high. Now I'm going to be watching for, and I'm going to be expecting a lower high, double top. And so when we get back up here, I'm starting to adjust my positions. Hey, you know what? Got a little bit of a bearish hammer here. Got a little bit of a wick here. All right, you know what? I've had a really nice run from here to here. I'm going to start taking some of my gains in here because the market doesn't look like it's going to head much higher. And so when you start getting this, now you're not in panic mode of, oh my God, all my stocks are tanking. I got to get out of it. Now I just gave back everything I made. You're taking your gains up here with the expectation that, you know what, I'm going to see some volatility. I'll have a chance to reload. And so the market pulls back, and now you're like, yeah, I'm glad I got out of that stuff. And we got below VWAP. Well, the guy that's still hoping that this is going to be brief and shallow didn't pay attention to the fact that we'd already had early volatility. So now he's like, oh, geez, we could give everything back. We're below VWAP even. Versus the guy who recognized what was going on, took gains up here. He's watching, waiting for support. Okay, we got some support here. Still nothing to write home about. Boom. Long green candle. Wah, 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 wah. Bullish 1OP cross. If we don't carve back into here and we keep moving higher, which is able to hold the high right there, all right, I might start adding to some or taking some bullish trades in here. And the stocks that you like back here might not be the ones that you like right here. And so I was looking for a retracement. I was looking for a red candle that would come down towards the VWAP that would be reversed very quickly. It could have been a long red candle that turns into a bullish hammer. Maybe even like that one right there in here. Didn't get that, but what I did get was this red candle here that was engulfed instantly. Okay, right here, I'm like, yeah, I think we can get back in and trade the long side. So the market runs up, it tests the high, we get some volatility. I don't worry about one candle, and that was reversed. So yeah, you've got a little bit more upside here, but that's the mentality. That's how you trade the market. And those are the clues that you need to be picking up on. Again, the clues come early. How we get from point A to point B matters. That's what tells us what we should expect from that point on. Then we can start looking for those candles. Then when we have confirmation, we know we should start taking gains. So everything that I told you, everything was documented in the chat room, posted before the moves happen. So, you know, if you watch enough of my videos, you know this is not just a bunch of fabricated bullshit where I go back and look at previous chart patterns. I'm giving this information out real time. So let's go and take a look at what we've got for questions here. Let's see here. Will, what do you see that's a good question? Will is in my ear. All right, so KR. Okay, great. So that's a nice chart. So RA is asking, hopefully my question was good. What are your thoughts on KR? Entered on the 8th at the end of the day, held the gap, closed on the high, got the March 22.53 calls. Did I enter too early? Still looks good to me. So you went out to March 22s, which is not giving you a lot of time. And that is potentially a problem, because if you get any kind of retracement here into the middle of this candle, it's going to take a while for that to gain its footing, because you've had some profit taking. So on a stock like KR, one of the important things to always ask yourself is, what do they do? Kroger, it's a supermarket. What do they have? Artificial intelligence to help them organize products? I mean, what is the innovation here? What is the reason that didn't like it so much in here, and now all of a sudden the stock is worth 10% more overnight? It better be gangbuster good news, but it's probably, hey, we had a really good quarter. Okay, they just announced earnings. Fantastic. If it's M&A, all right, that puts a completely different spin on it. So to me, it looks like good earnings, but let's go in, we'll check the news, and we'll see what it has going on here. Outperforming other retailers. I don't see anything big, certainly nothing takeover related. So that tells me, all right, now I want to watch and see what the stock does for a few days. I don't need to rush in, but this looks like it could be the start of a longer term move. We have a nice breakout through a high plus in here. I'm going to take off the overlay for S&P 500, clear the chart up a little bit. So yeah, we're through horizontal, was resistance, now would be support down in here. Okay, yeah, this is grosser. All right, it's holding all the gains and it's starting to get above AVWAPI. This is where I would start looking at taking a longer term position in it. These options are dirt cheap because they trade at a very low option implied volatility, and that's because the stock doesn't make big moves. So you can go in the money, buy lots of time. The difference between buying a May option and a July option can often be pennies. So give yourself the time. Go as long-term as you possibly can, and don't expect big rocket ship types of moves. Just a nickel a day grind higher. because it's a grocer. Okay, their margins are fairly low. It's a very stable type of company. So make sure you get that confirmation. I think this trade's going to work out well for you. You were in it a bit early. Should have waited a few more days to see if we retraced into this long green candle. And typically on a stock like this with very low margins, you're going to get some of that retracement. There's going to be some profit takers going, yeah, the news was good, but not that good. And then you can start to get in at a better price. So you also did not give yourself a lot of time for that trade to work out. It looks good. It looks like it's going to work out, but try and give that trade more time. Luke's asking, yesterday, long candles, 240, another potential warning sign for today. Long candles at 240, these right in here. Well, it was reversed. We knew we had volatility early, so a long red candle like that shouldn't be a surprise to us. And then it is instantly erased and we go higher. So this is pretty much negated. In fact, oftentimes, if you think about it, if this were a 10-minute chart, these would just be a doji because you pulled back and then you rallied back. So could have flushed out some people in here. That's why these long single candles, they're scary when you're in the trade because it's like, ugh, what just happened? I just gave back 40 minutes of gains in one candle. Don't let that spook you though. See what the next candle does. And in this case, it was just buy, 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 buy. So they just tried to flush out some buyers in here. And the market closed pretty close on its high of the day. So that's how I view these solos. Okay, do I take option expiration into consideration when trading open interest? So you would think so because the name of my company is One Option. The truth of the matter is options are the icing on the cake. They are not the cake. The cake is the underlying. So what happens in the S&P 500 futures? What happens in the S&P 500 SPY? That is what I pay attention to. All the other stuff that's out there, to me, is secondary and remotely so. So no, I don't pay a lot of attention to it. There are periods of time when you're going to see the market rally into normal options expiration the third Friday. I do pay a bit more attention to it when we start getting into triple witching. So yes, that is where you do start to see more market volatility. So yes, with those 4 exceptions a year, that's when I don't like try and gauge what the open interest is. There are some pretty interesting studies that gauge gamma and where the exposure would be, but they basically tell you at which extremes, if we get above this extreme, then we could start to really see some adjustment. But until then, it's going to serve as resistance. If we get below this support, yes, that could fuel the move lower because market makers are going to have to do some adjusting based on their gamma exposure. So that stuff to me is interesting, but I feel that most of those levels I can pick up on and I can already see based on the price action that gets us there if there's a threat that we're going to break through those support levels or if we're going to rally through them. So that's just my take on it. Others may have different opinions on it. They may find value in that information. I personally, if I just focus on what the price action in the S&P 500 is doing, I find myself very rarely surprised. You don't have to take my word for it. If you read my market comments, not for the last month, not for the last 6 months, for the last year, for the last 5 years, for the last 10 years, folks, I got videos on YouTube that go back to 2008. Take a look at a long-term chart, pick out one of the inflection points and one of the really big moves that came after that point. and then go back and watch those videos and see if I was on the right side of the action. You're going to find I'm very rarely blindsided by anything because I watch what I feel is most important. That's the S&P 500. Pete, can you comment on mindset after the bear market? Some of us see this as smooth sailing, but struggling with the damage that was done from bear market. Yeah, that's pretty tough. So a couple of things on bear markets and market transitions. For me personally, the times when I have struggled the most with transitioning markets, it's when you start going from one phase and one type of market to the next. So you're always trying to pick up on clues, and I'm going to scroll back so that we can take a look at some of those different issues. So, and I'll scroll way out so that we can take a look. So we start getting into a bear market here in 2022. And into the end of this bull market, you can see, all right, now September, we get the typical September sell-off. Now from October through year end, we should see a nice rally. Everything looks good. Yep, here we go. Everything's still on track. But we start to hear from the Fed that inflation's high and they might have to start doing something about it. Ka-chink. In December, this is normally a very bullish time of year, and you don't see typically big drops like this. Okay, so you get another big drop, and this comes later in December. These two moves here late into year end told me that the upside was going to be limited from this point forward because the drops were deeper and lasting longer than anything we had seen in the last couple of years. So yes, I'm starting to get very cautious, especially at a new relative high in here. So as we start transitioning into the bear market, we're kind of expecting that we could see some pullbacks. And so that means that we're tempering all of our long positions. We're waiting for signs that the market is going to be bearish. Well, we get this nice, big, deep pullback. The one thing I can tell you is that when you have this type of bullish price action for years, or a couple of years in this case, it's going to die hard because everyone has been trained in here, buy the dip, buy the dip, buy the dip, buy the dip. Okay, well, you get a big dip, buy the dip. Okay, so they buy the dip and they try and drive the market higher. And so for someone who's transitioning from bullish buy the dip mentality in here, you can keep buying all the way up because you know that with this type of strength, eventually you are going to get a pretty big, deep dip, but you're also going to get a good bounce. So when you get that deep dip in here, you could be freaking out because you got a lot of long-term swing exposure and you're like, oh crap, this is a lot deeper than I thought it was going to be, but I know I'm going to get a bounce in here because all these buyers haven't gone away yet. So you get that bounce, you get that lower high, and knowing in here that you were going to get that move here, you can start exiting your longer term swing positions on the notion that, yeah, now we have a double top lower high. Now I need to start shifting gears. Now I need to start getting into bearish mode. And so as the market starts to come in, you can see that these bounces are always very violent. So we get a nice big pullback in here. Most of the time the market goes higher or is flat, about 80% of the time. When it does go down, those moves are very steep, very swift. Market takes the elevator down and the stairs up, okay? So you get this big, deep trough in here, and the bounces being so tall and so violent tell you that there are still buyers. Choppy, 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 choppy. Every time I think I'm going to do good on this sell-off here and that the market's finally going to gain some traction, I get my butt handed to me because we have these monster rallies in here. So on the way down, when you see this type of herky-jerky price action, you need to take gains on the big troughs. As soon as support is starting to get established, look to reload when you have that high, and then now you ride the next move lower and you wait for that support to be established. Here you got a couple of really big bullish hammers. Get out in here. Don't wait for it. Okay, you get your rally. So eventually what happens in here is that we have this very long bullish engulfing candle. Look at that baby, off of a new relative low. Okay, that's a pretty good sign. And it took us quite a while to start working through that bearish cycle. But eventually, last year, we had a really, really nice rally. This price action, bearish explosion for X, it's been a takeover candidate, not going to look at it. This price action that we saw last year, this was the key. Oh, this was important. I could tell that the price action on the way down in a bearish market was herky-jerky, lots of big violent moves higher. Now all of a sudden we start to get this nice steady rally last year. But we're coming into August, so I don't want to be a buyer in August. We get this long bearish engulfing candle off of a relative high. Warning sign. We're going to get a pullback. It's probably going to last till October, and then seasonal strength should move us higher. So my mental mind game at this stage is, okay, let the market come in. I can try some shorts in here. I better not get cute with them because this move was so strong. I can expect big bounces. Get a big bounce. Okay, now I can start to look to reload. We start getting below some major moving averages. I can try some swing shorts in here. All right, now we're coming down to the 100-day moving average. Don't wait for the bounce. Take your profits now. Okay, we get this bounce starting to hit resistance. Okay, still not the one, but I'm getting closer and closer to the point to where I'm expecting a decent rally because we're heading into year end, and I've already seen earlier in the year that buyers are interested. We get one more crackdown and one more push lower, and this is where I told all of you, take gains on shorts. You don't have to go long yet because we don't have proof. Take gains on shorts. A big move is coming. So downward sloping trend line, above AV Web Q, above the major moving averages. Bye, bye, bye. And we don't look back. So those are the ebbs and flows of the market. That's the mindset that you need to be in. When you start seeing price action like this, you should not be worried that I'm going to be the fool, the music's going to stop, and the bottom's going to fall out. Okay? There's nothing to suggest that. When you start having big market declines and big sell-offs like we had back in here, and the guys that were in here, let me get back to the 2022 period, guys that had been forever selling bullish put spreads on market dips, they got their butt handed to them. And here they might be selling some more. Well, whack, they get hit hard and hard and hard, and they don't adjust, okay? Because they don't recognize that the market is changing. So these deep troughs are what tell you that, yeah, you've got to be very careful because we have lower lows and lower highs. And so as long as that's prevalent, you get these long, big declines in here, then you should be fearful that we're going lower. And if you can't trade the short side, then you should do nothing until eventually we have signs of support. And then now we really start seeing some nice moves higher. So just recently written a lot of articles about mindset. Nice, tight, orderly price patterns are what we want. And this is a nice, tight, orderly pattern higher that we can get behind. Get a nice little rally here, a breakout. We can add. Got a little dip. Hey, everything's still good. Higher, low. Okay, that's good. Ooh, breakout. Yeah, I can add here. when you have a market that's trending in a nice orderly fashion like this, the beauty of it is that you have moments of confirmation that the market is still moving higher, and you have opportunities to add with confidence. So it's not necessarily the initial position that you're going to be making a ton of money on. It's the ability to have the confidence to say, this is really nice and this is really tight and there are hardly any red candles. So I'm going to add, I'm going to add, I'm going to add. When you start adding, your average cost is way down here. You could take a major hit. There's nothing to suggest that you will. You could take a major hit and still weather the storm. And that knowledge is what allows you to continue to add to the position versus this chunky, choppy garbage. Okay, where we're down and then up and then down and then up and then down. You can't do anything with this, okay? If you're a day trader, you can. If you're a very short-term swing trader, you can. But in general, this is not where you're going to find mental strength in trading this kind of pattern, because it's cold 1 minute, hot the next, cold 1 minute, hot the next. You can trade it, but this is something you can really get behind. And moves higher tend to be more orderly, tend to be tighter, tend to be more stable than the moves lower. So there's no reason to just compromise and take shitty looking stocks. And I see it all the time, all the time. What about this stock? What about that stock? How about this one? And I look at it, it's like, that thing is just zigzagging back and forth. What the hell are you doing looking at that? You're going to be able to predict that price movement? Really? Even when the market is not doing anything this bullish and this tight, you are going to be able to find stocks that are doing this, even when the market's chopping around. So when you get the combination of market this and stock this, hallelujah, all the combination lock, all the tumblers are lined up. Boom. Let me add it. You can add, and I don't have any reason not to think that this stock is going to keep going higher, because there is not one long red candle in here. That's where my confidence comes from. That's the mental side of the game. Being able to predict price movement and looking for these nice, super tight patterns. Well, why is it super tight anyway? Because every time the sellers come in, whap, 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 they're trying to play whack-a-mole with this thing. And guess what? There's a buyer saying, how many more you got? How many more you got? How many more you got? I'll take everything you've got. And you never get a dip for that reason. And that is why you want to avoid the herky-jerky, choppy shit and focus on this really nice, tight pattern higher. So hopefully that lesson on trading mentality goes a long way for you. Do not trade choppy stocks. There's never, ever, ever a reason to compromise on a stock. Now, the market's the market. You're not always going to be able to get a nice, tight market rally like this. But the clues were there that we're going to get this. So learn how to read those. And then when you get them, know that, yeah, you're going to want to be very aggressive in here and in here and in here. I told you guys that, told you that in October, get ready. In November, I said, start loading up on longer term swing trades. This move is going to last a long time. Don't trust me. Don't believe me. Go back and watch the videos. All right. So let's see. We've got MDT. Can I look at that? spooked out on some trades Friday, pullback. So let me take a quick look at MDT. And again, if you guys aren't posting why you like the stock, I'm just not going to look at it. This is the last one I'm going to look at. It's garbage. I'm sorry. This is garbage. Does this look like a nice tight pattern to you? No. Forget about it. Hey, Pete, I got spooked out of some trades on Friday's pullback and took some unnecessary losses. Was there a tell on the price action that day that should have told me to keep holding my longs? Well, if you're trading on a longer term basis and giving yourself plenty of time, long options with 3-4 months worth of time, that's consistent with this type of price action. You should not be shaken out on one bad day. So the answer would be no. If you're in here going gaga goo goo, I got to buy a bunch of weekly call options. Okay, you're going to have your butt handed to you because the market is not telling us that it is in go-go mode. It is in one step forward, one step backward. It's more like 1.5 steps forward and 1 step backwards. So this momentum here, there's no reason to be in here getting super aggressive buying weekly call options. So buy time. Give yourself lots of time. Keep your time exposure to a minimum, or sell out of the money bullish put spreads on stocks that have really nice high option implied volatilities. Let that time premium decay work in your favor. Distance yourself from the action. Know that you're going to have a few dips in here. So the price action on Friday, I like the news. I thought that the jobs report came out as good as it possibly could. Let's see, Friday was right in here. And so we get this initial rally up. Were there any clues that this market rally might not go? Well, first of all, we start rallying, we start stacking nice candles, we start compressing up here. Yes, there is one thing. It's this guy right here. This strange little 10P indicator tells me to be very cautious right here. Right about here. Not here. Not here. Not here. Right here. Folks, you will not find another indicator that is going to tell you that this is a place to be cautious. Not one. Because indicators are all lagging. Except for 10P. It is predictive. And so if you've watched it in action, you know I speak the truth. If you've watched my videos, you know I speak the truth. This took me 10 years to develop. This is not some derivative of some other indicator. It is predictive. And it is telling me at the top here to be very, very careful. And so, yeah, once we start testing the VWAP and we get this long red candle through it, this was your clue. If you didn't have 10P, you're going to be late getting out. But that long red candle, we don't need to worry about solos. This one's a little bit different in that we're starting to get back all the gains from the day, and we had news and we had very heavy volume. So when we blow through the VWAP and we don't recover and we follow with another red candle, okay, that's enough. Yeah, now we get a green candle that's reversed instantly. This is all super bearish right in here. Yeah, it's time to get the heck out of Dodge. So you're going to get a pullback. And what fuels that move is this came off of a new high. So you're going to get profit taking. Sometimes you get a big gap up. And in fact, now that I recall, I missed the first hour of trading. I told everybody, I thought we were going to gap higher on Friday. So I'm like, okay, everybody watch out here, because when we gap higher, we've got a really good chance for a gap reversal off of a new all-time high. As much as I like the news, that risk is very real. And I came back an hour after the O, and I went, yeah, I could see that coming. So yeah, those, moves off of a all-time high or a relative high are going to be difficult. And if you look at a chart, any gap up to a new high oftentimes met with resistance. Some of the longer candles that you see are going to be long gap reversals off of a new relative high. So what you want to do when you get those type of moves is wait for an hour to make sure that that move is legitimate. Do not bite in the first hour of trading, because guess who's busy then? That's FOMO Joe in there. Yeah, baby, we're going to the moon. Lots of jobs. I got to have everything I can get my hands on. You don't want to be trading with FOMO Joe. Now he gets flushed out. So be patient in the first hour. Very valuable information, just like I've been showing you in the M5 chart. When you trade without that information, you're just shooting from the hip. You're going to be somewhere around 50% at best, and you are going to be sweating bullets, and you're going to be managing losing positions instead of calmly sitting back waiting for your entry point. You're going to be running around with your head cut off trying to manage your losses, and then, oh, I hope this comes back. Oh, I pray this comes back. Oh, this is a nasty loss. And instead, you should be thinking, yeah, I could see that coming. I'm glad I waited. So now the market's really starting to come in. Hopefully it won't come in too far, because I'd like to still trade from the long side. So while it's coming in, I'm going to be looking for stocks that have relative strength, that have maintained most of their gains and are still near their highs, so that I can buy the market, buy the stock when the market finds support. But on Friday, it never quite did. We got one bounce in there, didn't even get to VWAP. This is another great shorting opportunity in here, which you're going to take a look at 1OP. You got the market coming down with this type of tight price action and these type of stacked red candles and this type of tight orderly price action. We expect to get a bullish divergence. That happens when the market crosses and we get a bullish 1OP cycle. Okay, so this is all a bullish 1OP cycle. We're expecting a divergence. We get it because the market continues to head lower. And then now you get another cross right here below VWAP. There's going to be another nice selling opportunity. Where did we get that signal? Not here, not here, right here. So it's a great indicator. If you learn to trade it, I just love using it all the time. So, and on a day like this, well, what are we going to tell you on a day like this? It doesn't have to tell me anything, because this market has been run over by a steamroller and it's doing a whole lot of nothing. Okay, here we go. We got a little breakout here through horizontal resistance. I'll take a couple more of these questions, and then we're going to take a look at some picks and we'll call it a day. Holy cow, I'm already an hour in. Long Home Depot, like the trend. Yes, what do I think of Home Depot? I like that one. We talked about it early in the chat room. I like this. I mentioned to someone got long early. So we don't really have the market. Starter positions good. And you don't have to chase. So fine to have your starter position. I mentioned it in here. They make hammers. Okay, this is nice. I like it. Stock has a tendency to dip. You get your dip. Probably an HA reversal in here. Let's take a quick look. Yes, HA reversal. You set your HA reversal alert. Boom, you're getting an alert in here. And wonderful. Nice. Do I recommend anything other than AVWAP-E, AVWAP-Q? There's a lot of entry points that I've studied, but those are the two most reliable. So those are the only ones that I have in my platform, but they are excellent. How do I find the fastest horse when the market opens? I run my searches. And so I look for what's in green, royal flush. here goes this guy again. He's pumping his damn software. Wants me to buy his software. I've designed this software to trade this system. Okay. It may not be TC2000. That's okay. I don't want it to be. It's not designed to be. But when it comes to this system, there's nothing better than TC2000. Sorry, folks. It can't hold a candle to what this does, and it can't hold a candle to what I'm working on. And TradingView, same thing. So great platforms. This is what we use to trade the system. So I come in, I start looking at my searches. I know that every stock that comes up on my bullish searches is going to have exactly the qualities that I look for. Some of them are longer term variables. Some of them are shorter term variables. Some of them are going to be a little bit better than others, but that's why we have our custom columns. So you can right click, and I have a live event that Will and I did last week. You can come in and edit columns and add any variable you want. And so I like to have relative strength, and on our buy and sell signals, these are shorter time frames. And then I go longer time frame. Then I have new high of the day. Then I've got relative strength. Then I have heavy volume, relative volume, different time frames, short to long. I do have another field here that I'm currently testing for those of you who are on Option Stalker Pro, and it's for divergences. So you'll be able to click and see which stocks have a good divergence. So I'll take a look at a couple of them. But anyway, what we do is that the searches are good. And then when you have that buy setting up for the market, you just look across the fields and you go, green, 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 green across every single time frame. And it's got high volume on an hourly basis. Okie dokie. This looks like a good stock to me. And yes, that's going to be a really nice stock to buy. So that's how we do it. So you come in, get a nice big long green candle here. No, we don't have to chase that. What's on PC? It's a refiner. Okay, well, it's going to trade based on the price of gasoline. This is really nice. This tells me this stock wants to go higher. It comes back, it checks VWAP. All right, set an alert. Right click, create alert. Hey, tell me when the stock crosses below VWAP and when the stock crosses back above VWAP. And it's going to know in here, our servers know it's above VWAP. So if I'm setting this alert, it's not going to trigger right away because it knows it has to go below VWAP and above VWAP. And then I will get an alert right here. Downward sloping trend line, breach to the upside. Nice entry. It's cool stuff. I mean, when you start putting all the pieces together, the market D1, the market M5, 1OP indicator, where are we at? Should we be buying? Should we be selling? Okay, we're in buying mode. Now, how do we find the best stocks? Hey, this one looks good. Let's start setting some alerts early in the day. We think we're going to have a decent market rally in here. So you start going through the list and finding those super strong stocks. Right click, it takes you 2 seconds. Right click, set the alert, move on. Look for your next candidate, Then all of a sudden, you start getting alerts. Hey, MPC, it was below VWAP. Now it's above VWAP. You do your analysis. Yeah, hey, nice entry point in here. And when it's doing this in here, so now you can just click end of day. I'm going to click this. I'm going to click this. And now I would get an alert right there, which it's already been breached, but that's how you would do it. Okay, now I get a secondary alert here. So that's how we find the stocks. And if you ever come in and take the trial, you're going to see in the first hour of trading, lots of members posting great symbols, and they're posting why they like the stock. It all fits the system. They all have relative strength, but those are really, it's just It's so cool to watch everybody start to get it. Thanks, Pete, for the wisdom. I'm favoring bullish put spreads slightly more than usual. Is it because of the overall market backdrop? Yes, the market has stopped going up as fast as it has, so it's starting to lose some of its momentum. And that still favors selling out of the money bullish put spreads on stocks that have higher option implied volatilities. I would tend to favor 35 IV and higher. But if you get some of these stodgy old stocks like Kroger and some of the bank stocks that are grinding higher, you're going to have some good opportunities to buy very long-term, deep in the money options for just a little bit over intrinsic value. And those stocks are not going to go anywhere fast, but they're going to grind. I'm going to show you one in a second. I don't know what it's doing right now, but I know I liked it early yesterday and I like it today. Let's see. I'm trying to see if I've got any other questions for stocks that have. Sorry for the delay here. Yes, V and MA, Visa and MasterCard look like they're good, coming out of a bullish flag formation. They're getting a little extended, going near the high. I'll take a look at Visa. Their financial stocks, consumers alive and well, good jobs. They're able to pay their credit card bills. So you can see that this stock is not going anywhere fast, but it just tested a VWAP E. You could sell a bullish put spread below here as the stock's starting to get back above the EMA 8. Right in here, buying a breakout to a new high. And maybe you could also just own some longer term, deep in the money call options and just be willing to weather some of these little pullbacks here, knowing that eventually the stock's going to recover and continue to grind higher. So that's how I would approach it, but it's a good looking stock. It definitely is wanting to move higher. All right, so let's go find a couple of, see if I can find a couple of stocks. And I'm sorry, I'm not going to get through a lot of your questions, but you know what? You've posted some of them. If they're trading related, and I'm going to go through the chat and I'll post them to the live recording. So please don't post anymore. My thoughts on gold. Gold just baffles me. Gold is up and down, and I mean, it makes these choppy moves. This is really nice, but I can go back in the chart and show you all sorts of really good looking breakdowns and breakouts, and that's like, oh, like this one, downward sloping trend line breakout to the upside. Yep, looks great. And it just kind of falls apart and turns to mush. So one thing I'll say about gold that has me a little bit interested is that China is a mess. Those people have been burned so badly, and they're very limited in terms of what they can buy besides real estate. Well, one thing they can buy is they can buy gold, and they are definitely buying a lot of gold in jewelry stores because it's one asset that they can actually feel will hold its value and possibly even go higher. So I'm not a gold bug though, but does Option Stalker offer other alerts? Take the trial. We got all sorts of alerts. We got alerts you can set on every variable and every time frame. You can set trend line alerts. I did a live video last Thursday with Will. Please go in and watch that. It's in the live event tab of the YouTube channel. So let's go find some stocks. Let's wrap this up. Getting a little long in the tooth. So I'll give you one that I know I like this stock. But as I bring the stock chart up, this is not going to be a huge, fast mover. It's FedEx. They deliver packages. All they have to do is tell everybody that they have AI now in their delivery systems, and maybe that'll cause a big spurt higher. But my point is that don't expect this thing to just go gangbusters. It's going to have dips. It's going to have pullbacks. I love this breakout through this high minus trend line. I love the fact that it's above all the major moving averages, above AVWAP, and it's got this gap that it is likely to start filling. That's a big gap. This is what we call blue sky. Okay. You see any resistance up here? Nothing. Grind, 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 grind. If we start getting a little uptick in global economic conditions, we saw a couple of mentions of that in China, that would go a long way. We need to see it in Europe. We need to see it in Japan as well. But I like this breakout through this resistance level, and it's been able to hold the gains, and now it's starting to build on those gains, and we're doing it on decent volume. So recently, yesterday was a decent day. Volume today in the market's nothing. A couple spurts in here. So nothing big on FedEx volume-wise, but early in the day yesterday, we did have some really nice volume starting to come in right in here. There was a little bit of selling pressure too. So this is just the kind of stock that's going to just gradually work its way higher, sets itself up well for buying longer term in the money options with lots of time. Earnings coming up, I believe, in 2 or 3 weeks. So 21st. So yeah, about 10 days. So you don't have a lot of time to camp in this, but I do like the price action in the stock. I think it's going to continue to move higher. Make sure you get out before earnings. And MSTR has been super nice. The stock is going parabolic. It's you can see that right like that, climbing a wall. Still looks good. There, when you get out, you want to watch for these long red bearish engulfing candles like we had right in there. Was able to overcome that. You can get back in right here, but when you see that, you got to get out. Yes, you might have missed a little bit of money, but if you're long early, you had a lot of gains to preserve. So looks great. It buys Bitcoin, so it's got some exposure to the currency, and that's one of the reasons that it's up so much. Just going to click through a couple more here. MPC, that's nice. I like it. I think MPC is a good candidate too. So I'm only going to feature FedEx. FedEx is your pick of the day. MPC looks good also. And I was going to show you this new variable, and we'll see if we can pick one up here real quick. Let's see. We've got bullish divergence for those of you that use 1OP, you like 1OP. GE has currently got a bullish divergence, so we got a green dot there. So typically, let me just check real quick to see. Yeah, that's going to be a good one. That's a nice one. So typically, whatever 1OP does, the stock is going to do. So let's zoom in. So 1OP is in a bearish cycle right here. Bearish, 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 bearish. Okay. Stock should be going down. When it's not going down, and 80% of the time, this indicator is going to jive with what the underlying is doing. When it doesn't, we call this a divergence. It's very powerful because this tells us that the trend is very, very strong. And we can see that from the types of candles that we're getting in here, that it's very strong. So this is another variable you'll be able to use. And this tells you, and it confirms that bullish divergence confirms this trend strength. So GE looks very good to me as well. Thanks so much for watching, everybody. Please leave your comments in the live event section. I'll answer them. I'll get back to it. I'll read some of your questions that you had in the live event. Ari, we'll hope you get well soon. We will see all of you Sunday. I'll do a recording, and I plan on doing these live events every Wednesday. So thanks again. We will see you soon. Trade well.